What's really strange about the U.S. Mint has more to do with gold than it does with silver. If we look since 2020, literally, I've had conversations with Chris about that on and offline, the amount of percentage, anyways, of sales that are done in silver since 2020 are north of 95% easily for everybody. And gold has been an afterthought by and large over the last 2.5 years since COVID. And what was most startling to me about everything that is the inefficiency of the US Mint is not the fact that literally since March of 2020, we've had these elevated premiums on Silver Eagles that have never come back. Whereas if you would have called me on Thanksgiving Day 2019 and said, hey, I want to buy $1 million worth of Silver Eagles, I'd say, okay, Rob, 3.25 over spot, 265 back if you want over spot, if you want to sell them back to me on Christmas Day. I'd say, you got about 75 cents spread. You call me back 4 months later in March and the bid on those is $11 over, and they've never come back down ever since. But they have swings of $1 or $2, but they have been elevated 100% of the time since COVID. Now, what is strange about things is that in all of 2020 and in all of 2021, the Gold Eagles stayed where they always were my whole career, where you could buy Gold Eagles at 4%, 4.5%, 5% over from a retailer like myself. But the Silver Eagles are now costing you $13, $14, $15 over spot. It's been that way forever for the last 3 years, where things got really weird with the U.S. Mint. Now, I would have bought what you said about me. The fact that the rumor is that the Treasury Department would have to sign off on the ability for the U.S. to pay higher premium for the blanks. So Sunshine is doing what any capitalist would do. They're selling them to a higher bidder. Everyone wants it. And selling it at spot or near spot is a dumb deal for Sunshine if they can sell it for much more to everybody else. But the disconnection in all of this comes in, we get a phone call as one of the 27 U.S. Mint authorized resellers. We get a call from the U.S. Mint in June, late June of this year saying, yeah, by the way, we're going to curtail gold production by 50% into the second half of the year. Now, what? Why the hell would you guys do that if no one's been buying any gold for the past 2.5 years, just silver? So either they're having the same problem with gold, which I don't believe, because, 1 ounce gold bars cost me the same today than they did 5 years ago. Maple Leafs are just a little bit higher gold than they were 5 years ago. But the Gold Eagles, my cost on Gold Eagles is between 10 and 11% over the price of gold before I make a penny. I've never sold them to the public my whole career above 6%, ever. And now I'm buying them for north of 10, and they're impossible to get. So something is really weird with the U.S. Mint, and I guess there's a fine line, Rob, and you guys, between conspiracy and reality. I don't know what the answer is other than to say, if it were just the Silver Eagles, I'd buy the argument. Now that gold is into this shortage problem with the U.S. Mint, I throw up my hand and say, I don't know. Is it something much bigger than that? Are they trying to mitigate a run on the dollar? Are they trying to make it more difficult for people in this country to accumulate gold and silver legal tender in the United States and flee the dollar, or the potential problems that we see coming? Or is it something just as simple as a lack of supply? I don't know, but I will tell you, of all of the major mints of the world, they are by far the worst, the least amount of efficiency and the worst performing in terms of getting product into the public's hands. By far, not even close.
Go ahead, Dave. Y'all jump in.
Andy, I've got a couple questions here. You mentioned, would it require an act of Congress to enable the Mint to raise the price it pays for blanks?
I don't know if it's an act of Congress, but Janet Yellen would have to sign off on it. The Treasury Secretary has to sign off on it. I don't know what goes into.
So there's bylaws governing the Mint in terms of what they can pay in relation to spot for silver blanks.
I do believe so. Yes, I do believe that is the case.
Well, it seems like for the most part, the U.S. Mint's the only mint having this issue, because right now you can sell me a 1 ounce silver maple leaf for almost $2 below what you're willing to pay me for a Silver Eagle. Why
Yeah, and
is that the
that's
case?
true.
I don't.
I really it makes zero sense, and to make things even more complex is that the Sunshine Refinery, who provides the planchets or the blanks to the U.S. Mint, also provides the blanks to other sovereign mints like South Africa and a few of the others. So while they have no problem delivering product to the other sovereign mints, the U.S. is sitting there saying, for whatever reason, yeah, we've ramped up supply. They're making like 85,000 of them a month when they've proven in '08 and '09 and back when, they were making 50 million a year, that they can make 4 to 5 million of them a month instead of 70, 80, 90,000. They are woefully behind the curve in terms of demand meeting supply. It's just a mystery. I mean, people have been asking me this question for 2 years now, and I throw up my hands and say it's just a total and complete mystery. You would think that if there was that much demand for the Silver Eagle product, that the U.S. Mint would, or that the Treasury would pay more in the open market. If they're going to get it on the back end, I don't understand it. And this is why you have people who walk that line of conspiracy and reality. What is the truth? It just doesn't make sense.
Yeah, and I think to throw in some extra thoughts for people to ponder and potentially argue. It seems as though we worked on a particular type of system now that the market has shifted from a physical perspective and the flows have changed. I mean, flows west to east, out of the COMEX. I think Ian, last year at Silver Symposium, my friend was talking about and asked one of the panelists at one of the panels asked, why are the essentially the refiners going to COMEX to get silver because he can't get it from the miners. So maybe we're just living in a different world in which shortages along the supply chain have caused everybody to say, well, we have two things. You have the physical shortages and you have the difference between the physical and the derivative market. Maybe everybody's protecting their margins and protecting their business by saying, for example, if we're selling to the mint and they're not giving us preferred pricing, I can go out here and get it in the market. Why wouldn't I go out to the market and just not give them? Maybe it has to do with certain entities along the supply chain not adjusting to, the pricing signals. Do you think that could be a part of it? Or do you think there's something else going on to where the American Mint the U.S. Mint has basically just said, we no longer have that, prerogative to supply the American Eagle. We don't care about it anymore. Is it more of they're looking at it as an artifact of an old system? Or do you think it's still supply chain stuff that's causing some of these issues? And I'll open that up to anybody who wants to talk about it.
I have a hard time believing it's really the supply chain issues. I mean, the supply chain is distorted for sure, and it's fractured, and it sucks. And I can read you a list after this I had my operations a week or two ago provide this to me so I could talk about it on podcasts of all the refineries throughout the world who aren't taking any new business or just don't have the capacity. But they've been the only one who's been like this since 2020, and it's been 3 years of it. It's something to me. I don't know that they look at it as an artifact of bygone times, but it's the behavior is wholly unusual. And when it's easier to get South African Krugerrands or Austrian Philharmonics than it is U.S. Eagles for the public, something is really wrong. And now the fact that they're doing it with gold is what opens, I think, the door to this being something much bigger than just what we are being told. Because with gold, they don't have the same restrictions that they do with silver. They can go out into the open market anywhere and buy gold. And buying a gold good delivery bar is not going to carry the type of premiums that you see in silver. So I don't know, you guys. One other point, and that is I asked Keith Neumeyer once about the fact, why don't you guys just all withhold like you do? Why don't the other miners? And he more or less said that these miners, many of them are living hand to mouth, and they have a good deal. When they pull the doré out of the ground, they call someone like JP Morgan or Goldman Sachs, and they say, here's where you deliver it to. The money will be in your account in an hour. And so, they send it off to a refiner somewhere on behalf of the bank, and they get paid like that. They don't have the ability or the wherewithal to hold back production or to disintermediate the bullion banks. They don't have deep enough pockets. Maybe that will happen someday, don't know. But there are very few mining companies like First Majestic and Keith who have this vision. Most of them are just trying to get paid and pull the metal out of the ground and keep on going. So I don't know. It's a good question, but it's a tough one to answer.
Yep.